Hello, friends. The topic of the day is none other than the regulator of stock exchange, that is Securities and Exchange Board of India. Okay, so if you look into the presentation, what you'll have is like we'll try to have some history, we'll try to have some introduction, we'll try to go into the preamble, we'll look into the objectives, functions, and contributions. Okay, this is the timeline, but you see these are the topic lines, so which are going to come in. Now here you see a brief history when it comes to Securities and Exchange Board of India. Uh, there are so many laws are there in place. Okay, so for a healthy growth of your capital market, you need laws in place. So to avoid any manipulation into your market, any while you're doing share trading, insider information, or maybe window dressing, or something else, which is a problem. So you see, government needs to be very strict on these things. Hence, they have to come up with something special, a specific regulator for stock market, which in the form of like you see Securities and Exchange Board of India. Okay, this entity came into existence, and there are so many bylaws or the other laws which are helping SEBI to execute things in the right manner. Some of them they are Bombay Securities Contract Control Act 1925, Capital Issue Contract Control Act 1947, Securities Contract Regulation Act 1956, Registrar of Company in bracket the Company Indian Company Act 1956. So all these laws are there already in place which help SEBI to keep a proper track of your market. Okay, so you see in 1987, July especially, so the Cabinet Committee on Economic Affairs they approved various like you see various powers and they brought SEBI into existence. Now the purpose is like mainly to promote healthy and orderly development of securities and to ensure adequate investor protection. You see, if you don't have an environment where investors don't have a security element with them, it is very like it will be a very vulnerable environment. People will be reluctant to invest. Hence, you see, these two things are very much eminent if you need to develop your market. Now, SEBI came into existence with a special ordinance, which was posted on 1992. It was approved by President of India. SEBI is your regulator for securities market in India. It is managed by a board comprising of 9 members, including chairman. Now, you see there is a paradox which is mentioned here. This is a positive outcome of Harshad Mehta scam. 1990-91, you see, you remember Harshad Mehta scam. It was all related to wrong investments, window dressing, manipulation, and you see, speculation was there in place. So, Harshad Mehta scam was not considered to be a good period. Okay, but during this period, the flaws that we have in our system helped us to bring in this entity called as SEBI. Now you see, SEBI is described as to protect the interest of investors in securities and to promote the development of and to regulate the security market and for matter connected there with or incidental there too. You see, they are saying anything and everything related to securities, related to the development of market, related to the interest of investors. You see, anything and everything, whatever is there, will be coming under SEBI. So it is very important to have SEBI into place because you see, if you don't have it, then it's an issue for investors, especially the small investors that we have. Now, purpose and role of SEBI. So the main purpose is to check malpractice to protect investors' interest. And you see, there are three groups who are there involved in the entire process. One is the issuer. Issuer is the companies, corporates who are bringing in these securities into market. They want to raise money. Investor is someone who is having surplus, so they would like to invest their surplus into certain companies where you do have a bright future. Then you do have the third party, which is intermediaries. They are the facilitators. They are bringing in competition in professional practices that we have in place, like broking firms who are helping buyer to buy stocks from market. They are helping buyers to also liquidate their investments if they want to. Okay, so buyer seller interaction only possible when you have some intermediaries in place. Okay, everyone is not skilled enough to do it of their own, so you need to bring in these intermediaries. So NSDL, CDSL, they are your depositories. You do have broking firms. You have credit rating agencies. They are directly or indirectly related to capital market. Okay. Now, basic objective is to protect the interest of investors in security market, to promote the development of security market, and to regulate securities and for matter concern. You see, this is the same preamble we are reading again. So the nothing, it is nothing but, you see, it is only market, market and market. So SEBI, what powers we do have with SEBI? So looking into the powers, they have a power in context to stock exchange and various intermediaries involved. So what we are trying to tell you in, let's say you have a grievance against any intermediary, where you have to go? You have to go to SEBI. If it is like anything to do with any stock exchange in particular, any regional or national level stock exchange, again SEBI is the right authority to approach. SEBI has powers regarding to stock exchange and intermediaries dealing in security. So it is actually the market where transactions are being done by the intermediaries. So the entire market comes under the purview of SEBI. Okay. So further, they can inspect and scrutinize any books of accounts. You see, if you're an intermediary, you're giving service to your clients, and your entire business portfolio is related to your capital markets. So you see, SEBI can intervene and can ask you to provide certain evidence or records, and you see, these players cannot refuse. Now, power of SEBI is in continuation relating to monetary penalties. You see, when, let's say, let me tell you one thing. What a regulator can do if someone is doing a error, if they are doing it knowingly, if they are doing it intentionally, they are trying to cheat people, public, and they are trying to affect public trust into your market. So you see, there can be monetary punishments. Okay. So let me tell you one thing, very important. SEBI is creating public awareness, and for this they have brought an investor protection fund. There is a huge amount which has been collected in investor protection fund. From where this money is coming in? Think on it. So it is like SEBI is penalizing it to various players, brokers, intermediaries, all intermediaries, and then they pay from their profits too. Okay, they pay a certain fee to SEBI, and then you see SEBI is getting these funds accumulated through these routes. They can also not only monetary fine, they also can suspend the registration for a short period of time. Okay, like you see, you must have heard about Reliance, like Reliance doing some sort of speculation or trading their prices by doing some sort of trade. So you see, Reliance Group was penalized for this by SEBI. So penalty can be monetary penalty can be non-monetary, where they can suspend, or they may restrict you to access your market. Okay, so power to initiate action relating to functions assigned, like SEBI has a power to take action when it comes to something like any intermediary or any other something like some agency which is involved, and then you have to ensure protection of public interest, but you are not doing it. So you see, they may initiate an inquiry looking into the manipulations and malpractices, and can finally take a call on that particular party. Powers under Securities Contract Regulation Act. Like here you see, you what are you supposed to do is like, you have, you see, you have power to delegating some of your powers to some of the other like subsidiaries. Okay, subsidiaries means the intermediaries who are involved in stock exchange. Now you see, where is SEBI reporting? SEBI is reporting to Ministry of Finance, and Ministry of Finance, under a notification in 1994, delegated many of their power to like to Securities Contract Act. Under this particular act, they have given it to SEBI. Now, SEBI is a authority, so authority should have some power. So powers are delegated by Ministry of Finance. Next is like SEBI is also empowered by Finance Ministry to nominate 3 members to the governing body. You see, what we are saying is like, there is actually a set of nominated persons who are running it, who are governing it. Okay, so SEBI is empowered by Ministry, Finance Ministry, that they can nominate 3 people to run, uh, you see, to run various stock exchange. Instead of what earlier was like government was nominating it. So government means political parties. So maybe there is a chance that people with their affinity to a particular like a political party may be getting a chance, irrespective of their merit. So now it has been shifted to SEBI. So SEBI will do it judiciously, looking into the background of a person. Okay, so in their skills and competencies, power to regulate business on stock exchange. So you see, as already stated in this point, so anything happening on stock exchange is all regulated by SEBI. You know, there is a concept. I'll just give you an example of it. You know, filters are there, circuits are there. Circuit means this is the point where we will stop the trading of a particular stock. So we have brought in this uh, circuit mechanism to just ensure that there is no like excessive speculation in any particular stock. Price is going up, should be kept on hold. Price is going down, should be kept on hold. When you hold this thing for some period of time, you see maybe rationalization will happen. Investors will understand what might have gone wrong, and it may bring that movement, price movement, back into normal movement zone. So this is what is important, and then maybe possibilities are there where fraudulent and unfair trade practices are happening. So in that case also, you see SEBI can intervene, initiate, or like certain inquiry committees, and these committees may come up with their conclusion, and fines or penalties may be imposed onto into various defaulting service providers. Now you see power related to insider trading. Insider trading is like, you see, insider trading means what? So I am working for a company at a very senior level. I get financial inputs about my company's performance, whether it is doing good or bad. So if it is doing good, what is going to have an impact of this announcement tomorrow morning on my share price will go up. So you see, before I'm making it public, I'm giving it to some of my relatives, some of my friends, close friends, family friends, so that they can get a benefit from this information. So this is what is called as insider trading. Means I'm misusing the powers assigned to me. I'm giving undue favor to some because of my position. So I'm misusing my position, communicating some financial information related to company or related to some of your future projects to some of my close ADs, just to make sure that they should get benefit out of it. Or maybe there is a heavy loss which is going to come in. So in order to take a get exempted from this loss, or to avoid this price fall, so you see there may be a possibility that relatives may sell out the stock early morning and may take an exit. Now you see these situations, it is not fair for everyone. It is not fair. So SEBI has to ensure it that insider trading is not happening. Now functions of SEBI, if you look at, you will find them to be protective, and second is developmental functions. Now you see, SEBI being a regulator, they will put in some sort of regulations too. Okay, protective means protection of interests of your investors. Development of market is your second point, and then third is like regulatory framework, means you bring in some strict checks. Okay, price rigging is what they would like to avoid, and then they avoid insider trading. You see, they need to set certain examples for public at large, so that these small practices should not be repeated by masses. If it is found, then people should be penalized, and the news should be spread all across, so that other people who are into the thought of like committing similar sort of things should be cautioned well in time. Okay, SEBI prohibits fraudulent and unfair trade practices. Unfair trade practices means what happened in Harshad Mehta scam in 1990s is a very good example of it. Any not only manipulation, window dressing, but also diversion of funds from one source to another source without disclosing it. So this is what is risky and is going to affect public trust in market. Hence, you see these unfair practices should be stopped. Now, next is like SEBI is doing lots of investor awareness programs to educate investor regarding various issues which are there for an investor. So they don't stop. So they are doing it non-stop. They are doing it through direct channel. They are doing it through indirect channel. They are collaborating with other regulators. So it is like a very extensive job. They promote fair practices and code of conduct in security market. Now you see developmental function. Now, what is supposed to be developed by SEBI is your stock market. So they promote various trainings among intermediaries. Now, you see, we need to compete at global level. What is happening in New York Stock Exchange, or let's say Japanese Stock Exchange, should any new technology, any new subject area which is being introduced in those markets should also be like, you see, whose role is it to bring those technologies and those subject areas into discussion in the Indian market? It is SEBI. Okay, so SEBI will promote training of intermediaries as per the need of the. They promote activities where you see we bring in, or we adopt flexible and adaptable approach. Now what they do is like, SEBI has permitted internet trading through registered stockbrokers. Now you see what is happening here is just to bring in comfort, just to bring in convenience, just to bring in speed and accuracy, just to bring in like you see rationality into the entire process. They have started, like you see, everything is automated. You place an order, you want to buy something, it happens in real way lightning speed. It is only possible through connectivity. And SEBI has made underwriting optional to reduce the cost of issue. You see, if you want an underwriter, then only you should go for it. If you don't want, so need not to. You see, it will help you to reduce your cost, flotation cost. Okay, and you see, company may go into break even at an earlier point with this. Even initial public offers of primary market is permitted through stock exchange. You see, IPOs, initial public offer in market, is like a buzzword. People, investors, there is a set of investors who only deal in IPOs. So companies who are fresh, they would like to raise it from market, they come to stock, this capital market, any of your stock exchange. You see, what happens is like they get lots of confidence because they are getting investors readily available. Regulatory framework, now we'll go into rules regulations part. So they said code of conduct, so you have to follow certain protocols. Rules are very strict. If you don't, if you're not able to do it, you see, as an intermediary, you may be penalized. Merchant banks, brokers, underwriters, they have to submit their reports, periodic reports, their performance, their commission earning structures, and everything has to be disclosed to regulator on a periodic interval. So it helps regulator to forecast for your market performance. It registers and regulates the working of all those who are associated with stock exchange in any manner, directly or indirectly. If you're dealing something with stock exchange, then SEBI is, you're going to be your authority at the top. It registers and regulates the working of mutual funds too. Mutual funds, okay, people contributing in mutual fund for, like you see, better returns. So mutual funds are again regulated and overviewed by SEBI. It regulates takeover of companies. You see, merger and acquisition, takeover. So one company taking over second company. You see, SEBI will ensure it that the following act is in line to public interests. So there is no party which is there to create monopoly. Okay, monopolistic monopoly trading practices should be avoided. It conducts inquiries and audits of stock exchange. Now you see, this is not all. Clearing and settlement is again very important part of your stock market. Once you place an order, by what time will you be getting your stock in your account? You see, or you're trying to sell something, by what time will you be getting cash? This is what is clearing all about. So clearing and settlement is something imminent. If you have a failure in clearing and settlement process, you see, the entire market will lose it trust element. There will not be any credibility for your market. So they have to ensure it. And you see, any change happening in international market will be immediately, like you see, we work in line to what is happening globally. And if you look at our performance, you'll find we are very good in terms of technology adoption. Okay, so from T+2 to T+1, we are ready to go for T+1. But you see, we need to work according to global standards, global parameters. Hence we are stuck somewhat. Me else, we are very good in this technology part. Our national stock exchange is fully automated exchange. We have the competence to reduce the settlement period from T+2 to T+1, or simply T day, trade day. You see, but because we are there in a market with other players too, so we are working in coordination with them. And this shows where do we stand in current global position, in terms of capital market technologies, type of trading volumes that we are receiving, uh, attractive investment environment. You see, FDIs and FIIs, so you can get a clear idea about your country's growth from these parameters. Now, drastic transformation to a paperless market. You see, everything is happening digital. PAN number, demat account. Demat account is like what is bringing everything into digital mode. So paperwork has gone down. So things have changed a lot. Cutting clearing and settlement time, and now we are moving towards T+1, which I have already stated. Then market is made more safe for investors. So what we have brought in terms of SEBI's contribution, you see, issues of guidelines, protocols, and then policy drafts, which is in line to somewhat public interest. So public interest advertisement as and when there is a need. So advertisement awareness is created using advertisements, like any fraud scheme or collection of the proceeds or requesting SEBI for legal, like you see some sort of call up for uh, like payment of blocked amount in certain companies. So you see, whenever recoveries are done by SEBI usually inform it to public through media, local media, through national level media, newspapers. So you see, communication is being done, and then they ensure it that whatever complaints are coming to SEBI, they are going to resolve it in time bounded manner. Investor education, I already said, investor protection fund is there, and they are conducting so many sessions across India. Okay, so they are also doing satisfaction surveys, and they are collecting feedback from investors time and again. The reason is like if there is a need for a change in your environment, investor is going to let you know through surveys, through feedback sessions. Okay, and then you see there are so many things which like where regulators are coming forward. So disclosure of companies and all, everything has been made public. Data sets have been put onto websites. So transparency has been brought in. Okay, so in summary, what we can do is like for the development of an economy, a regulatory authority like SEBI is must. Capital market, which is the main organ of like mobilization, fund mobilization for companies and corporates, should develop over time, simultaneously bringing in credibility to financial markets. You see, this is like actually entire globe is watching at you. We are right now in a global village, so where you see entry and exit is all allowed to everyone. So you see someone who is an investor is not sitting in India, they may be sitting outside India, but they are watching your markets very closely, how you're framing your policies, how you're bringing credibility to your market, how you're ranking across the globe. So this brings in, like you see, uh, like your market value is going up with this, and then investors will for sure come inside. So FDI, FII, they are like you see basic indicators which tells you about your market standing in global front. And you see, being India among some of your fastest developing nations, so has a huge potential. Okay, some of the terms that you should know: National Stock Exchange, Bombay Stock Exchange, they are your two multiple national stock exchanges. Okay, so both are located in Mumbai. Then you have instruments which are being traded here. It is equity shares, derivatives, future and options is coming under derivatives. Then you have commodity section where you're trading in various agricultural commodities, metals, bullions, currency. And then you see forex is again another segment which has been added here. So other terminologies include primary and secondary market. You see, market comprising of both primary and secondary. We'll see about this later in our discussion in detail. So we have brokers who are charging brokerage. They help us doing our transaction. Know your customer. KYC guidelines are very much common everywhere. You go to bank, you go to insurance company, KYC is must. Demat is dematerialization of shares. So it is through a demat account you can initiate this. Trading is like when you buy or sell something. Okay, for that you need to place an order. So demat accounts are must, trading accounts are must. It will be given to you by your broking firm. Delivery is like when you take the custody of shares. Intraday means same day you buy and sell, and this is something leading to speculation. Blue chip stocks, they are the best stocks. They are the best rated stocks with a growth, stable growth history. Bull and bear, these are the two types of markets scenarios. Bull is very positive, bearish is very negative. So according to the same, we are putting in investor and speculator. Investor is a person who is going into market with an investment for a long term period, whereas speculator is someone who is speculating, who is manipulating, and maybe a short term player. He is there to just make money, and once he is done with it, he will be leaving it. Court, and you see, you have two quotes: bid and ask. So at what price are you going to buy, or at what price are you going to sell, is the quotes which are available on stock exchange. Settlement is like the entire process during which you actually sell your stocks. So stocks getting debited from your account and being credited to buyer, and then buyer account is getting debited in terms of money, and then it is crediting to your account. So this is what is settlement. Portfolio is a group of securities together. Liquidity is bringing in buyer for your security. Let's say you would like to take an exit from an investment, so someone should be there to buy it. Volatility is changing your market situation, changing your price of a particular stock due to certain factors. Hedging is mitigation of risk. Hedging is avoiding risk by going into certain contracts. Arbitrage is an opportunity where you see, like where you can make money. I'll explain you this thing in another way with an example. Let's say a bottle of Coke. This is available in India for rupee 30, but when you go to a neighboring country like Nepal or somewhere else, it is like available for rupee 50. Same Indian rupee. I'm doing this transaction in Indian rupee due to scarcity, or maybe due to some other factor. It is available at 50 rupee. So 30 in India, 50 in Nepal. Let's say, why not a businessman buy it in India and then sell it in Nepal, making a profit of 20 rupee in between. So you see, this type of opportunity is called as arbitrage. So in market also you do have arbitrage options available, where you see in one market price of a particular stock is low, whereas in other market it is high. So you buy cheap and you sell high. This is what is arbitrage. Then insider trading is like, insider trading is a practice where you share your internal information unlawfully to some of the clients or some of your friends, some of your other connected entities, with an intent to make profit, with an intent to make money. Okay, so this is insider trading. It is unlawful. And if you need to know more on stock exchange, you can visit to these websites. First is for NSE India, second is for BSC India, then you have Money Control, then you have, you see, Management Paradise. There is a website where you can do discuss it. Then you have tmxmoney.com, another website. So these are some of the websites where you can refer. And with this, thank you.